Hello traders, this is Christian Fromertz, Tribeca Trade Group with your trade idea of the day. Today is Tuesday, January 3rd. And what we saw in the beginning of the day through the overnight session or pre-market session is a nice move up here in the indices. We saw that for about the first hour of the day and then a little bit of a fade that happened. Just looking at the 5-minute bar, you could see that's basically the highs of the day was 10 o'clock this morning. And then we stalled out here. So we haven't really moved back down. And looking at the daily chart, a couple things that I'm noticing here is, we're not really seeing any buy or sell signals, which we haven't here in the last week. I have the 2 standard deviation and the 3 standard deviation Bollinger Bands. We're right in the middle of the Bollinger Bands right now, so not any extreme movement. So I think we could take advantage of this choppy market right here. Another thing that I'm seeing is with these 2 moving averages, the yellow line is the 5, the blue line is the 20-period exponential moving average. They're kind of coming in to meet one another. So we don't know how this is going to shape up right now. We don't know if we're going to see a sell signal with the yellow line crossing below the blue or just a moving average crunch and a good opportunity to possibly go long a little bit further out. The way I'm looking at it right now is with not much, kind of a choppy market right now. I think there's an opportunity to collect a little bit of premium. Further, if you look at how these stocks are, I always look at, from my background, trading indices and trading customized products, trading ETFs, you always want to look at not just, the index product itself, but what it's made up of, what the underlying stocks are doing inside of an index. So the 500 stocks, are they moving together right now as a group, or are they moving, or are they separating? Are they doing different things? So if you look at the implied correlations, this is the KCJ index. This is the new index for the new year. And if you look at the implied correlations over the last, I have 1 year up here, but we can look at this in terms of 2 years. And it's a 2-year low right now. So, what does this mean? It means that stocks within the S&P 500 are not moving together as a group. They're in fact separating. The correlation is extremely low. It's a 2-year low. So with the stocks and what this means is it's a stock pickers market. It's still not a market to be owning indices, to be playing them long or short. Why? Because they're not moving, especially when you have implied correlations this low. So to take advantage of this, one trade that I'm looking at, or a trade that I've executed today, is selling a S&P January Iron Condor. We do have some economics that are coming up, but I don't think they're really going to move the market that much. We have the jobs number that's coming out on Friday. We have the Fed minutes that are coming out tomorrow, Wednesday. But we only have 12 trading days left for January expiration. So one way that you could kind of take advantage of a choppy market, which I think is what we're going to get. I think we are going to go one way or another, but I think it's going to be baby steps. I don't think they're going to be really large chunks. I also don't think volatility is going to move up crazy going into the inauguration. Maybe it moves up a little bit. So one way that you can take advantage of this is by selling a call spread and selling a put spread, selling an Iron Condor. And I went a little bit further out. I didn't go right at the money. The current value for the SPX, so I should have that in my analysis, is right now, call it 2250. So 2250. So you can see I'm going out to the 2285 and the 2290. So I'm selling the 2285 and buying the 2290, and I'm collecting $1.05. I just sent this alert out. You could actually get a little bit more. This is actually a 225 that you can collect, and I'm also selling the put spread. So I'm selling the closer, or the closer to the money put spread puts, which is 2250, and I'm selling. I'm selling the 2225 puts, and I'm buying the 2220 strike, and I'm collecting $1.20. So when you look at both of these together, you're collecting 225. The width of the strike on both sides of the calls and the puts is $5 wide. So the maximum risk is the premium that you're collecting minus the total width of the of the spread, which is $5 on either side. So the total risk, you can only go one direction, right? So the total risk is 275. That's the most that you could lose in this trade. The most that you could collect is 225. So this trade is ideal for a choppy market. Also, if you have trades on in single names, if you're positioned a little bit long, you could take advantage of collecting premium if we continue to chop around for the next 12 days, 12 business days, which I think that we're going to do. Keep in mind that we also have a holiday mixed in here as well. So that's why it's 13. I'm also not counting today because it is 3:30 in the afternoon. So there you go. That is the trade that I like for today. In terms of collecting a little bit of premium here. So thank you for watching today's trade idea video and have a great rest of the week. Thank you.